Thanks, Paul. Thanks, Red Corporate, and thanks everyone for your attendance here today. 4 years ago, New World Resources deliberately set about finding a high-grade copper deposit. We took a position that copper was going to be in supply shortfall towards the second half of this decade. I think we're being vindicated in our position. Since that moment 4 years ago, then every step along the way, the Antler project's got better and better. We identified the opportunity, did due diligence in December 2019, acquired the option to take 100% interest in January 2020, commenced drilling in March 2020 just as COVID was unfolding, and every step along the way the project's got better and better. We provide exceptional leverage to the copper price. We are a near-term producer. We have defined a resource that provides an initial 13-year mine life, and that resource is extremely financially robust, and we've just embarked upon a concerted exploration program that's going to see us test 7 extremely high-quality exploration targets over the next 6 to 9 months to make the resource base bigger and to evaluate the staged expansion of the processing plant that we will be building at Antler. Just before I get into project details, corporately, market cap-wise, our market cap's about $75 million. Just last week, we announced that we'd raised $11 million by way of selling a very small royalty on the project, 0.9% royalty with the right to buy back 0.3 percentage points for $11 million, and which sees us with about $14 million cash at bank at present. Very strong board, team of mine builders. Tony Polglaze in particular has been involved in construction and production at about 20 mine sites over the course of his career. Most recently as Managing Director of Avanco Resources. Avanco took a small copper deposit in Brazil. In fact, it was a small prospect in Brazil. Tony and his team IPO'd that in 2008, took it through successful exploration, through permitting, through feasibility, through financing, into production, and was taken over by Oz Minerals about 5 years ago for about $450 million. Tony's been there, done it before at Avanco and at many projects prior to that. Middle of this year, we recruited a mining engineer, Nick Woolrich. Nick's most recent role was as CEO of PYBAR, a mining services business. They had about 1,000 employees operating underground, predominantly underground mining all around the world. We have the team to build this. Our focus is very clearly twofold. On the one hand, we're taking Antler to production. We have a 13-year mine life defined already, but at the same time, we've only just begun to scratch the surface with exploration. And so we now also have a concerted exploration program underway to continue to grow the resource base. In terms of the deposit itself, we're located up in northern Arizona. We're about an hour and a half's drive south of Las Vegas and about 3 hours north of Phoenix. It is a fantastic jurisdiction to be building a mine. It is sparsely populated and there is very few shared land uses. For example, the only real shared land use we have is cattle ranching. The rancher in this district runs 270 head of cattle over 140,000 acres. This is very, very marginal country. It's a great place to be building a mine. We're only 15 kilometres from an interstate highway, 15 kilometres from transcontinental rail, and mains power or grid power comes to within 700 metres of the old headframe at Antler. In terms of the deposit, what attracted us to it was that the grade. Historically, a modest amount of 70,000 tonnes of ore has been mined from Antler, but the grade of that ore was very, very high, running about 3% copper and about 6% zinc. So from here on in, I'll refer to the project on a copper equivalent basis. So that's taking the value of the zinc and the lead and the silver and the gold and adding that to the value of the copper. So on a copper equivalent basis historically, then this resource was mined at a grade of about 5% copper equivalent. It was only modest past production of 70,000 tonnes, but what we saw was mineralisation outcropped over 750 metres of strike, and we saw the potential to find a lot more mineralisation. It's a VMS deposit. These VMS deposits invariably form in clusters, and indeed in this district where we are, there's 2 past producing VMS deposits. There's another one 6 kilometres up the road that was also last mined in 1970, but no work has been done in this province since 1975. So we took this historic resource, this historic past producer, and we systematically started exploring underneath the old workings. And over the course of 3 years, we drilled consistently, non-stop for 3 years, drilled 130 holes, almost 60,000 metres, and declared 2 resources and have completed 2 mining studies along the way. As a consequence of that work, in late last year, so towards the end of 2022, we declared a second resource, which with a 1% copper equivalent cutoff, so that's eliminating all mineralisation lower grade than 1% copper equivalent, then we have a resource that stands at 11.4 million tonnes at 4.1% copper equivalent. 79% of that resource base is classified indicated, so a high confidence level in that resource. Equally though, if we then declare a resource at a 2% copper equivalent cutoff, so that's eliminating all mineralisation lower grade than 2% or worth less than $170 a tonne, then we still have 95% of the metal. We still have 10 million tonnes at 4.5% copper equivalent. This is a very, very robust, very high-grade resource. So we've taken that resource and we've done a mining study. And essentially the objective of the mining study was to see what our maximum production profile could be. Can we mine this resource as it stands at 1.5 million tonnes per annum? Can we mine it at 1.7 million tonnes per annum? The answer is that we are looking to mine only by way of underground, so environmentally and socially responsibly, only by way of underground. Because of the grade of the resource, we want to use a backfill material to recover 93% of that resource base, and so we are going to take the tailings, use that as paste fill, and recover 93% of the resource with that best practice in Arizona, and also use dry stack tailings. That sees us mine over the course of the project, sorry, I'll just flick past that one. Over the course of the project's life, it sees us mine 15.5 million tonnes at a rate of 1.3 million tonnes per annum. That may seem counterintuitive when we've only got a resource of 11.4 million tonnes, but it's because 93% of that 11.4 million tonnes is mined, plus planned dilution, so taking out some adjoining waste rock so that we recover as much of that high-grade mineralisation as possible, that sees us mine 15.5 million tonnes over the course of 13 years. That's an absolute base case. We know things are going to get better from here. The mineralisation remains open at depth, mineralisation remains open at strike, and we have 7 high-priority targets that we are going to drill test. But this base case sees each tonne of ore, each diluted tonne of ore delivered to the mill, worth just under $200 per tonne, and we can mine that for about $100 a tonne. So it's very high margin. When we look at margins, then we see that over the course of that initial 13-year mine life, we generate $3 billion of revenue, or 4.3 billion Aussie dollars. Half of which, after pre-production capital and after sustaining capital, half of which is free cash flow. So $1.5 billion of free cash flow, or over 2 billion Aussie dollars. Because the finances of this are so robust, we are taking this to production. In the coming weeks, we will apply for mine permits, and we will be building this mine. But while we do so, we're turning our attention to exploration, because we see that with a larger resource, we can look at either a staged expansion of the processing facility that we'll be building at Antler, and or a longer mine life. So we have now turned our attention to finding additional VMS mineralisation. Again, reiterating, these VMSs tend to occur in clusters. In this province, we've got Antler, and 6 kilometres away, in 1970, there was also production from the Little Copperwell deposit. So 2 past producers in this belt, but we have secured a 4,000-acre parcel of land covering the extensions of the geological sequence that hosts Antler. Now, one potential place to find more mineralisation at Antler is underneath the existing mineralisation. Over the course of 3 years, 100% of our drilling has been constrained to 600 metres of strike. We've simply gone deeper and deeper and deeper because mineralisation's got better and better and better as we've gone deeper. And we can see some of the results that we've intersected with drilling as we've gone deeper and deeper. We can see in the upper levels, 42 metres at 3.5% copper equivalent, 10 at 6, 18 at 3.5. Best hole on the project, 27 metres at 7% copper equivalent. Deepest hole in South Chute, 10.7 metres at 13.7 copper equivalent. And the very deepest hole on the project, 850 metres below surface, 21.5 metres at 5.3% copper equivalent. Clearly there's more mineralisation at depth, but the reality is, having done the mining study says that we can only mine the physical dimensions of this project at a rate of 1.3 million tonnes per annum. So to go and discover more mineralisation 850, 900,000 metres below surface won't impact the production profile. It will prolong the mine life, but it won't allow us to increase our production profile. So rather than chasing deep mineralisation, we've now turned our attention to the along strike potential of Antler itself and the cluster of potential deposits that may be discovered at Antler. So the drilling that's been done at Antler, if we now look in plan view and we superimpose the extent of that drilling at Antler with the dark blue ellipse here, is 600 metres of strike that sits on a 1.5 kilometre long copper in soil anomaly. The northern 600 metres of that copper in soil anomaly has not been drill tested. The southern 200 metres of that copper in soil anomaly has not been drill tested. So there's potential to find mineralisation along strike. Again, the reason we haven't yet tested it is because it was so easy to find more and more mineralisation at depth. But now we're looking for shallow mineralisation to feed earlier in the production profile to a centralised processing plant. So we are embarking upon a program to drill test this in the coming months. Equally, along strike from Antler, we have 4 very high priority lookalike targets. Antler has a coincident soil geochemistry anomaly and a coincident IP geophysical anomaly. Between Copper World and Antler, there's 4 lookalike targets, all of which are completely undrilled. Outcropping mineralisation at surface, historic prospecting at surface, completely undrilled. Over the coming months, we will definitely drill test these. Recently, we've secured the land immediately to the south of Antler. We've been working on securing that land for 4 years. Newmont owns or has owned the mineral rights to that area, and finally, after 4 years of negotiation, we've agreed on terms to acquire the mineral rights in that area. That likely contains the extensions of the Antler deposit. But the most prospective target that we have in our portfolio actually is located 75 kilometres away from Antler. If we want to feed additional ore to the mill that we will be building at Antler, it doesn't matter whether it comes from 2 kilometres away, 5 kilometres away, 25 kilometres away, or even 75 kilometres away. If it's high grade, we can truck it to that processing plant, and we won't need to incur the capital cost of building a processing plant. So deliberately, over the last 18 months, as we've had confidence that we will be building a standalone processing plant at Antler, then we've been looking for opportunities for high-grade mineralisation that can be trucked to Antler. 75 kilometres away to the southeast of Antler is another belt of these VMS deposits. In this belt, down near the Baghdad porphyry copper deposit, which is the 5th largest copper mine in the US, there's 6 past-producing VMS deposits, all of which are high grade, all running 3.5 copper, 7 to 12% zinc. We've established a land position there. We've covered 10 kilometres of strike of that sequence that hosts these deposits, which hasn't been explored since 1970s as well. We've undertaken systematic soil geochemistry. In July, we completed an IP survey over the northern portion of this land position, and we've defined an extremely strong geophysical response that measures 1.2 kilometres by 1 kilometre. It is a very, very strong geophysical response. Over the last couple of months, we've been prospecting over the top of that, and there's mineralisation and alteration everywhere. And just last week, we received some assay results from rock chips taken over the top of that IP anomaly. These rock chips are running 15% copper, 3.5% zinc, 180 grams silver, 2 grams gold. It has all the affinities of being a heavily mineralised sulphide-rich VMS target. What's more, we find extensive chalcopyrite at surface here. In the coming weeks, we will be drill testing this target as well. So, to summarise, we have clear 2-pronged approach. We are in an excellent jurisdiction. Arizona is regarded by the Fraser Institute to be the 7th best jurisdiction in the world to be developing mining projects. We have extremely high-grade mineralisation. Paul Howard, analyst at Canaccord, regards our deposit as the 30th highest grade copper deposit in the world. We have a critical mass to mine, 13-year mine life. Modest capex, 250 million capex, short lead time to production, but high margin, with excellent exploration upside. Thank you.